All right, all right. Everybody hear me okay? Everybody hear me okay? All right, we're going to get started here. We're going to get started with a little comedy. Are we calling it comedy? Humor? What is this? All right. So I'm gonna hand the mic off to well, you can introduce yourself. You're a big boy.
Hey, I'm Dylan.
They can't see you there though.
Something I'm short.
Okay, we'll go to the side.
I'm literally built like a door from like Cinderella.
All right, let's go.
Hey everybody, how you doing? Good. You enjoying that chicken? Yeah. Alright, so I got a couple of jokes for y'all tonight. Now, if you take care of chickens, doesn't that make you a chicken tender? And what if stars are just full smoked in a container so we can breathe?
All right.
And last but definitely least, what do you call a house flipper that can't raise money? A burger flipper.
You rocked it. All right. Thanks, bud. Good job. All right. He only gets paid if he sends an invoice. This kid is going to tell you you didn't get paid from the last event. I can't confirm or deny that, to be honest with you. Can y'all hear me okay? Because I'd rather not hold the mic. Good, good, good. You can't hear me? We got a seat right here for you. Can everybody else hear me, or do I need a mic? Okay, I'll talk loud. I will talk loud. Well, thank you everybody for coming out tonight. It's good to see everybody. I know we had a lot of weather and bad traffic and stuff like that, but oh well. We're all here, so good to see a lot of familiar faces. I see some faces from the past. Good to see y'all and a lot of new faces. So we're gonna have some fun tonight. We're gonna talk about private lending, and I've got a special guest, and we've got a couple announcements tonight as well. So let's go ahead and get started. How we're gonna start this off first is I'm gonna introduce a couple of our sponsors tonight. We have a lot of Chick-fil-A and some other things here, so we're gonna let them come up real quickly and introduce themselves, and we're going to get started. But what I'm going to do first is cover our agenda before we do that. So let's go through the agenda real quick. So we'll go through all of them. We're going to go through our sponsor spotlight. I've got a couple of private lenders here that I've worked with in the past and currently actually. So they're going to come up and briefly kind of share their experiences, because I'm sure there's some of you guys who are interested in becoming a private lender, and you're probably thinking like, what is that like? That's kind of scary. And so what is better, what I found is more useful than hearing someone just talk about it and telling you this, that, and the other thing, hey guys, is actually someone showing proof. Like, no, I've done it, I'm doing it. So they're going to come up and share a couple of their stories. Then I'm going to do a brief overview because of time constraints on Private Lending 101. I'm going to give you guys who are new to this a quick run through. It's not going to be a master class, but I'm going to give you a good overview so that if it's something that you're interested in, you can, do more education and follow up and things like that. And I've got some resources that can help you along that way. And then after that, Nate Hare's going to come up, just flew in from Arizona to come and talk to you guys. So he's going to be here from Directed IRA, talking about how to invest passively with your self-directed IRA through that avenue. And then we're going to open it up to Q&A. If you guys have questions, be writing them down. Make a couple notes if you have something. If I go too fast, so you can ask those questions later on. And then we've got a big announcement and a few little prizes at the end. Does that sound good with everybody? All right. So let's get started. So I'm going to bring up Mr. Jeff Laird from Laird Law. Jeff, you want to come on up? Do you want the microphone or do you want to talk? All right. Thanks, Adam. Yep. So one slide I'll bounce over real quick. And because most of you guys know me, and I don't want to bore anyone about my story, but there's one thing I want to point out before we get started for those of you who are new to this. And I know I've been to some events, networking events, random, just events, like through conferences and things like that. And if you don't know the speaker, you're like, man, do I know this person? Like, can I trust this person? So this is kind of like my credibility slide and to introduce myself to some of you guys who don't know me. So I started in real estate almost 2 decades ago, 18 years ago. And when my wife and I started out, we were broke as could be. We're living in an apartment, and I tell the story a lot. And essentially, I used a credit card to buy my first investment property. We had just went through this Dave Ramsey class. We were like financially just uneducated, and we paid off our credit cards, our student loans. We're like, woohoo, we're debt free after reading all this Dave Ramsey stuff. And I'm like, well, this kind of sucks because I hate my job, and like he's telling me to just stick it out for 20, 30 years, and then we can take a vacation. I'm like, that's not good. So then I started reading other authors and philosophies, mainly Robert Kiyosaki, and I learned about good debt. And I'm like, Dave Ramsey never talked about good debt. He just talked about bad debt. I never heard of this good debt thing. So I started learning about that, which is also called leverage, which AKA is private money. And I started learning about it and learned fairly quickly. So that first year I went out and bought 10 rental properties, still working a full-time job and all that kind of stuff. And then my second year in 2008, I put together a few little small partnerships so that I could continue to buy homes. Because after 2007, it was really easy to get financing, as a lot of you guys know. So I bought these rentals, refinanced them with Fannie Mae loans, even though like I had no money. I had excellent credit. I've never had bad credit. I've always had good credit. But I didn't have any money, and I was getting these refinances done. I'm like, that was pretty cool. Until I got 10 and I was capped out. I couldn't do anymore. So I put together some partnerships, and that went great. So I was doing all the hustling, bustling real estate stuff, and I had some passive partners who were buying rentals. And that was great. But then the following year, I learned about private lending, and I had never heard of it before. And I was like, well, this sounds better, though I can pay a lender 8, 10, 12%. And that to me was better than splitting 50% of the profits. Cause like I said, I was doing all the work, and I love my partners, but I didn't want to give up 50%. So I kind of went on this, down the rabbit hole of raising private money, and, done a few things over the years, written some books and, things like that. But what I'm most proud of, and I don't say this to brag or boast, to impress anybody, but to impress upon you that I know this works. Because I didn't even realize this until a few months ago. One of my assistants were going over stuff and pulled a record. I was like, how many mortgages have we paid? Because I just used to say like probably 5,000. And it's over 10,000 mortgages we've paid since I've got started in this business. We've not missed a one. So that's pretty good data that this can work, right? I'm not telling you that with some borrowers is going to work that way, because I'm a lender too, and I've had to take properties back. So it's not always that way, but it can be that way if someone has a sound and sustainable business model. So that's what we're sharing tonight, is how you can, when you do it the right way, like it really, really works well. Okay, so let's go ahead and pop through some slides. All right, so I'm going to bring a couple of lenders up. John, you want to come up first? All right, guys, you're welcome, John, to the stage. So Ben is telling me we prefer to use the mic for recording. Yeah. And if it doesn't.
Doesn't sound like I'm blasting you out or anything.
No, I think we're good.
Okay. Well, I first heard Brent speak about 7 years ago in the summer, and he was presenting from his private lender playbook. And right away I thought, that's something I can get involved in. And so while I was in the presentation, I got on my phone and I ordered up a book, and it came in, and I spent a few months reading the book and digested. And finally, about December, January of 19, did my first meeting. So Brent got me started in this business, and I really appreciate the education that I received in that book. And it's still the foundation of my lending practices. So Brent's an expert in lending, but he also has another side. For me, Brent is the gold standard of borrowers. He's who I compare other borrowers against. And I've done quite a few notes with Brent. And I'm always pleased to be a lender on one of Brent's notes. because I've got the confidence that he and his team are going to first pay the interest on time. They're going to overcome any surprises. There's no project that doesn't have some surprises on it. He's going to complete the project, and he's going to return my principal. So, always pleased to be a lender on one of his notes. In my experience, he's an excellent businessman, and he has high integrity. I learn a little bit from him and his team on every note that I do with him. And I really appreciate his ethical approach to both borrowing and the thanks.
Thank you.
Thanks, John. I appreciate that. Watch yourself. Okay. So I didn't write that script. I just asked John to share a couple things, but I do appreciate it very much, John. Dennis, you want to come up? You must have started right after the book came out. This is about 8 years ago. Soon thereafter.
I don't know if I need it.
You don't know if you need it? Okay.
I don't think so.
It's okay if it doesn't record. Go ahead.
So my name is Dennis Surf, and I'm a private lender. I've been knowing Brent for 3 or 4 years.
I'd say at least maybe a little longer.
Oh, maybe even longer.
Yeah.
Yeah. But, he's been great. He's professional. He's taught me what private lending is all about, and the benefits. I love the benefits, and he taught me the benefits of it.
What
And,
benefits you like the most?
Money.
The mailbox money, right? Yeah, that's it. That's the benefit. That's the big benefit.
And but anyway, I did meet Brent through a friend, and I know it's always skeptical about lending your money to somebody that you don't know. But I had this friend that I've been known for now maybe 40 years, and he introduced me to Brent, and I listened and heard what he had to say, and it was all good. And I think we've had about 5 deals. As a matter of fact, I just finished one today. I just started to do one today. So it's real good. Private lending is good. Brent, you could trust him. I really trust this man, because you've got to have somebody that you can trust with your money, right? Because you work hard for it. And you want to make sure that the person that handles your money, you trust them.
Yeah.
But I'm all in. I don't know if y'all are, but I am. I'm in.
Appreciate it, Dennis.
Okay.
And, well, I promise you, these are not paid speakers. I promise you that. I said, you got the email. I said, if you want to share a couple things, I would appreciate it, but just about their private lending experience, but I do appreciate it. It means a lot to me. When I first began getting some lender commitments, and this was like late 2009 or mid 2009, so I was using hard money. There's nothing wrong with hard money, but it's expensive. And I talked to my coaching students. I'm like, start off with hard money, but it's like riding a bike with training wheels, and then you want to get off those training wheels and progress. You're going to look kind of weird if you're 30, 40 years old and weren't riding a bike with training wheels, okay? And so I started raising some money, and my wife was, she's like, man, that's great. It's exciting. But I felt like the weight of the world on my shoulders as well, okay? And I talk about this with a lot of my coaching students when we're talking about raising money and events. And she's like, it's great. And I'm like, it is great, but there's a heaviness that came with it. And I told her, I'm like, if things go wrong, like if I'm going to raise money and borrow this money, if things go wrong, my lenders are getting paid back no matter what. We'll sell our house. We'll live in the streets, because we had moved into a house or an apartment at that point in time. And so that's just been my commitment. We're going to figure it out. And like I said, it's not always easy. It's not always sunshine and rainbows. Like, there's challenges that we deal with. It's not easy. A lot of stuff that we do. You investors in the room, but that's the difference when you guys are looking into this, like really as much as you are analyzing the deal, you're going to be analyzing the borrower. I'm jumping a little ahead right now. So let's talk about this. So I'm going to give you guys the basics of private lending. Okay. The basics of private lending. I'm working on an online course for lenders that y'all will be able to go through in the near future that will be more in depth. You can always read the book, but if you don't want to read the book, I'll have a shorter course for you as well. So what are the basics of it? It's a very simple concept. It's as old as time, you know. It's a simple concept with solid collateral. People, you know, you look at the stock market, that's a fairly simple concept. You invest money in a company, and depending on how well it does, it goes up or down. But where's that collateral at? Where's your collateral? Right? I used to be like a piece of paper. Now it's a number on a computer screen, and who knows what they're doing with that money. And, you know, behind closed doors, we can watch the business news every single day, and there's foul play going on. So this is very simple concept backed by collateral when you do it the right way. What is that collateral? Real estate. Okay. You're the bank. So if you're going to be the bank, then just do what the bank does, right? Like act like a bank would do. So there's going to be some loan documents that will secure that investment. There's going to be some other things that you need in terms of insurance, surveys, things like that. So just be the bank. Everyone's gotten a bank loan before, right? They have certain requirements. So you're going to do the same thing. So you're kind of guiding that ship. So you're going to do the underwriting, so to speak, on evaluating the borrower and the deal. Could seem a little bit overwhelming in the beginning, but it's not once you do it a few times. And we've got some things that can guide you through that. And then when you start doing it, begin doing it, one of the biggest things is just to avoid the pitfalls. So I've seen new lenders come into this, and if they just had a little bit of education, a little bit of help, taking just a little bit of time to make a few little phone calls, talk to an attorney, talk to the right title company, talk to a real estate agent perhaps, they could avoid those pitfalls of skipping over some of the due diligence steps. That's one way I've seen this happen. And then the other way that I've seen this happen, where a lender gets into trouble, they go chasing these really, really great returns that seem even too good to be true. And what happens most typically when things look too good to be true? They typically are. You know, so when it comes to private lending, you know, I'll tell you, if you're looking for investors to loan to, you can make higher returns from other investors in this room as well that will pay you more money typically than I will. And the reason why is because I know how hard it is to be sustainable in these ups and downs of the real estate market. And I've also found as a lender, this is what I've advised my parents to do, my in-laws to do, friends and family to do, is read a book, and not my book. There's this book, The Tortoise and the Hare. And it's not about my man Nate, but it is about the tortoise. And we know who wins that race, right? So that's one of the beauty things with this, is like you can just put that money, invest it wisely. Be cautious to chase these high returns that look too good to be true, because in market, when cycles change, they may be true also, I found, for seasons, but when markets change and cycles change, I have a lot of friends and people I know in this business who've exited the business, and they've left a lot of their lenders high and dry. That is the ugly side of this business. And so we got to be careful with that. We got to avoid those pitfalls. Your borrowers are the opportunity, and they're also the risk. Okay. So one of my lenders once said this. She said, Brant, I know, she knew quite well about lending. She used to run a title company. She said, I know that the real estate is the security, technically. You know, the deed of trust, that's my security, if I read the definition. She's like, but I don't see it that way. You're the security. She's like, you're the security. So there's one particular deal, she did, you know, there's a couple nuances with it. She's like, I wouldn't normally move forward on this deal, but she's like, I am, because I trust you. And she's like, because you're the security. So it's a little bit out of our typical buy box kind of thing. So you have to really look at the borrower as equally as you do the real estate. Okay. So I like to say you got to look at the deal and you got to look at the dude, because a lot of people say, oh, well, this is asset-based lending. We're going to lend based on that asset, which is true, but you can have the greatest asset in the world. This could be the greatest deal in the world, but if it's the wrong borrower, it doesn't matter. It doesn't matter. I'll share a short story with you. There was a local investor. A lot of people know this person. They reached out to me about a loan a couple of years ago and talked to them. Never loaned with them before. Never really done business with them, but I knew their name and, we knew each other. We're talking for a little bit and they said, hey, I heard that you do lending and there's a deal that I want to buy and I want to see if you'd lend on it. I'm like, yeah, I'd love to work with you. That sounds great. Send me some information. And says, okay, I will. And I was talking to another friend of mine and their name came up and I was like, hey, I was talking to so-and-so. They're looking for a loan. He's like, oh, did you hear what just happened with them? I'm like, ears perk up, right? Like, no, I didn't. What happened? And he's like, well, she just got foreclosed on by another lender, a friend of mine. I didn't know this. Okay. What was the story? He's like, I don't know, but it wasn't pretty. So I called the person back and I'm like, hey, I heard a little story and you never know if things are true or not. And I just want to hear. And tell me what happened. And she's like, had no problem admitting it. She's like, yes, I got hooked into a bad deal and it was really stressing me out. And I was like, okay, and what else? She's like, well, we're going to go over the budget on the rehab, this little thing, that little thing. She's like, I just couldn't deal with it. It was stressing me out. I'm like, so you just walked away from the lender? She's like, it was just really stressing me out. Okay. Didn't even do a deed in lieu of foreclosure. So you got to realize, like, those are some of the people out there. So you have, and this is a well-known person. I'm like, you've got to be, when my kids around, I'm like, you got to be sure. Are you serious? So be aware in the lending game, right? They could look all nice and polished, but be careful because they are the opportunity. Like, they will make you or break you. So you have to really spend your time focusing on the borrower more so than the deals. Because if you've got the right borrower, you're going to be in a much better position. And then the ideal thing is you've got a right borrower and the right deal. That's where we want to be. And so then we get into the deal analysis of learning how to analyze deals. Okay. Learning how to analyze deals. The simplest way I would say, the best thing to do especially when you're starting out or anytime, is you have to understand what you're investing in. I think that's a Warren Buffett thing, right? Warren Buffett or Charlie Munger. Understand what you're investing in. If you don't understand, you don't do it. So typically when someone's getting started in private lending, single family lending is one of the easiest things to do, right? It's very, very simple. I'm going to go over a case study and just a quick case study and show you kind of the process. It's really easy to understand. I think that's why this is becoming such a popular, investment opportunity, because people understand it, the security, it's local, all these types of things. And, but that's really important. Okay. It's really important. If you're working on a potential deal with the borrower and you don't understand something about it, stop and ask them, have them to clarify. If they can't communicate it to you in a way that you understand, then just don't do the deal, right? A lot of commercial deals are like this. There's some complexity with commercial real estate. It's a total different game than single family. So just make sure you know how to analyze those deals. And then just follow the playbook, right? I know a lot of you have read the book. There's a lot of other, good books out there, but there's a playbook for this and there's a way to do it the right way. And that playbook, a big part of it is building your team. Jeff would be a big part of your team, right? If you're doing loans, right title company, attorney, making sure that you have some people that you can contact about insurance. Not that you have to get insurance, but you may have questions about the insurance that they're providing. So the important thing is building the team. People who have likely done this, maybe not as a lender, but on the other side, helping with transactions, either hundreds or thousands of times. Like there's no sense in doing this alone. And it's very easy to build a team when you're getting into the lending space. So what I can do real quick is show you how the cycle works. Okay. So this one's a little bit trickier. So here's a quick overview of how this works. So a real estate investor finds a deal. So after they find a deal, they are going to most likely contact you if you're a lender. So you're going to sit down, have a conversation, discuss the deal, the opportunity, the rates and terms. And what I like to say, go to the next one, is you're going to create a handshake agreement. Okay, like, yeah, it's a win-win. They're happy, you're happy. You're going to have a handshake agreement backed by the proper paperwork. Okay, and this is how I got started. In the beginning, when I was talking to lenders, I didn't have all the answers to their questions. They had asked me questions like, I'm not sure about that. Let me find out. Let me call my attorney. And then I would learn that, and then I understood that. And that's how I kind of always figured things out in the beginning. And so that's what this process looks like, is you work out your deal, you're going to have your rate, your terms, your interest, all that type of stuff. And then you compile your list of questions as well that your borrower may be able to answer. And if they can, you still go to Jeff or an attorney and say, hey, I've got questions about this, as they go through preparing the paperwork, right? And so after that paperwork's done, or your agreement is done, it's going to be sent to an attorney. They're going to start preparing those documents. And then after everything's done, meaning all the paperwork, the note, mortgage, deed of trust, insurance, surveys, all that type of stuff, you're going to go to closing. At that point in time, money is exchanged. One of the golden rules of lending is money goes to the title company. Okay. There's a few variations and exceptions to that, but if you're a first lien lender on a piece of single family real estate, you go to the title company. Okay. So it goes to title company closing. There's some, attorneys do some desktop closings and things like that, but typically that's the way it works. Then after that point in time, if the investor is renovating the property, they're going to go through doing renovations, fixing it up, draw inspections if those are there. And you're going to start getting what Dennis talked about, mailbox money. That's when the money starts coming in, depending on how your payment structure is set up. And then at some point in time, they're going to the investor's either going to flip the home and sell it, they're going to refinance it, what have you. At that point in time, you'd be cashed out. You'll get your money back, like Dennis talked about, and then you can repeat it. Does that make sense? That's a very simplified version of it, right? So if we go to a case study, you can just go through the whole thing. So here's a quick case study. Let's say, for example, you loaned $200,000 to an investor. So they borrow $200,000. Let's just assume that covers the purchase price and repairs. You make a $200,000 loan. Could be cash, could be self-directed IRA. By the way, our lenders are about 50-50. Okay, we've got close to $18 million out on the streets right now with private lender capital, or with capital. Cash, self-directed IRA, it's close to 50-50. Close to 50-50. So let's say, for example, this was a 12-month loan term. That's typically how ours are set up. And it was 10% interest. But if it's a flip deal, for example, those are usually around 6 months, meaning the house will sell, the lender gets paid off. So if that were the case on this, you invest $200,000. If you you're lending at 10%, you're going to make $10,000 on that. Not bad, right? And then so to simplify it, it's just like the investor bought a house, they flipped it, you funded the deal, aka you were the bank, and made $10,000 on that money in 6 months. So you got passive income, secured by real estate, no tenants, so you didn't have any landlord headaches. And that is one of the just simplest ways that I could explain this 101. I hope I didn't go too fast for you guys. Did I go too fast? No. All right, good. If you have some questions, like I said, you can write those down. So now I've got a special guest to announce. We have a big announcement we're going to announce later. I'm not going to go into that right now. But this is a good friend of mine. We go many, many years back. Ladies, I'm going to warn you, He's easy on the eyes. Okay, I'm not gonna lie. He's easy on the eyes. Okay, so we go way back. It's been a long time. So just flew in from Arizona to see you guys and talk to you guys. So Nate Hare, come on up. Give him a round of applause. Mic check.
Forgot to do my little mic check. I got it. Thanks, buddy. Yeah, good.
There you go.
I know some of you guys, right? Or gals. All right. Yeah, I know him back there. So thanks. I came to find self-directed IRAs back in 2012. I actually found self-directed IRAs here in Houston, Texas. How many people know what a self-directed IRA is, for the most part? Most of us do. I want to talk a little bit about what self-direction is, but then how it applies to you as a potential private lender or borrower at the same time. So a little quiz here. How much money is in retirement accounts currently? Anybody want to take a guess? You're not graded on this quiz, by the way. How much money is in retirement accounts? Total. 401ks, IRAs, 403bs. Okay, that's an easy, broad guess. How many trillions? $45 trillion. $45 trillion. So it's the largest source of American wealth. More people have money in their retirement account than their bank account. Now, what most people don't know is what their retirement account can be invested in. Okay? Now our quiz is going to get a little harder. Okay? I'll give you guys the answer to this. When you talk about an IRA or a 401k, that can really be invested into almost anything. Most people just think stocks, bonds, and mutual funds because that's what we're sold if we've got an IRA at Fidelity or Charles Schwab or Wells Fargo Advisors. They'll only hold in the IRA with them what they sell and make commissions on. But the tax law doesn't prevent us from taking an IRA and buying a rental property or taking an IRA and doing a private loan to a real estate investor. Okay? Now, the catch is you still have to work through a company that acts as your custodian. Now, you always have to have a custodian in between you and your IRA because by definition, and here's the cool part, your IRAs, your 401ks are all tax exempt. They're not taxpayers. They don't pay taxes like you and I. So if you start thinking at that level, right, when we're real estate investors or private lenders, the ability to take what we're learning from Brant or what we're already doing and apply that knowledge to our retirement plan, do we think we can grow our retirement account faster and better on the investments that we choose or just stocks and bonds, mutual funds, maybe the things we don't understand? So this is where it was like the aha moment for me. Because when I found out about self-directed IRAs in 2012, I was already investing in real estate since 2004. And I had an IRA at Northwestern Mutual that was invested in a mutual fund. When I first heard that you can marry those two ideas together, real estate and retirement account, the first thing I said was, that's got to be illegal. There's no way. There's no way. We can buy real estate, do private lending in our retirement accounts and pay no taxes because our IRA is not a taxpayer. Well, long story short, yes, the ability to take a retirement account and invest in pretty much anything on the planet is possible. There's only two things you can't invest in with a retirement plan: life insurance contracts and collectibles. That's it. Okay? So as a general rule of thumb, anything we can hold title to, anything we can buy can be held inside of our retirement plan. You can go ahead and go to the next bullet here. Okay? Here's where we really want to think about, how a retirement account works. And it's not listed here, but I'm going to name a few retirement plans that some of you guys might have already, or some of you might be thinking about setting them up for yourself or your kids. At Directed IRA, that's the company that I represent here. We're based in Phoenix, Arizona, but we've got clients all over the country. We've got 6 types of tax-exempt, tax-free plans that you can invest and do private lending out of. Okay, that would be a traditional IRA. Anybody have a traditional rollover IRA, old 401k? Okay, raise your hand if you do. Okay, raise your hand if you don't raise your hand to any question that I ask. Got you guys. All right. So traditional IRAs or rollover IRAs can be self-directed. Roth IRAs can be self-directed. Okay, SEP IRAs, we even have a solo 401k. How many people in here are self-employed? Okay, a couple people. All right. Talk to me about the solo 401k. If you guys don't already have that, that's one of the greatest wealth building tools for private lending. But we also have non-retirement plans that can be self-directed that are also tax-free. Things like a health savings account. Anybody have a health savings account in here from an old employer? I actually self-direct my Roth IRA and my HSA, my health savings account, together to loans to investors here in Houston. I'll talk a little bit about why I do that and why I like those two plans specifically. But then we can also self-direct children's accounts for education. Okay? Again, these are things that I wish they taught us in school. Right? So not only are there plans that you can take and deploy out into the market through a private loan where a borrower is paying back the plan, that can be funded for your retirement. You can have some money coming in to pay for healthcare, and you can also have some money coming in to pay for your kids' or grandkids' education expenses from pre-K through college with tax-free dollars off the sweat equity of one of your borrowers. Okay? So there's 6 types of plans that can be self-directed and deployed as a private loan. Okay? They can also be partnered together on the same loan. And I'll talk a little bit about the power of partnering different plans together. Okay? And if you guys have any questions, just raise your hand. Next thing. Okay. So we kind of talked about this, right? Diversify beyond Wall Street. I'll tell you, most of our clients, or at least most of my clients, have an IRA at Fidelity, and then they have an IRA with us. You're not limited to how many IRAs you can have, by the way. I have a client that has 35 IRAs. By no means do I think everybody in here needs 35 of them. But you at least maybe need 2. If you really want to have the widest spectrum of investments in your retirement portfolio, they talk about diversification a lot. I think real diversification is having an IRA that has some stocks and mutual funds. I'm not against those. But you want to have some of your assets in a retirement plan tied to some real property. Right? Real estate is the largest segment of our economy. I think if you don't have some real estate investments inside your portfolio, you're missing out on the largest opportunity, real estate. Whether it's passive through a loan to a borrower or it's actual ownership of real estate inside your retirement plan. Where do you guys think more growth happens in IRAs? What we call these assets, when we talk about real estate as an asset in a retirement plan or a private loan, promissory note as an asset in a retirement plan, those are called alternative investments. And there's actually a study that the IRS spit out through a Forbes article in 2020. Where do you guys think the larger IRAs are? In public assets or alternative assets? Kind of a trick question. What's that? Alternative. Let me give you some stats. This will blow your mind. Okay, there was an article in Forbes, March 2020. I still remember the date because I still remember the article. And the article had some kind of fuzzy headline about watch out if you've got alternative assets in your IRA, watch out is what the article said. Now, I think we all know you can't just read the headline. You got to actually read the article to find out what they're talking about. And the whole purpose of the article was to identify through a study that the IRS audited 27,000 IRAs. Okay, random IRAs, 27,000 of them. They looked at the 27,000 IRAs and found that only 2.5% of those IRAs held an alternative asset at all. So 98% of those IRAs just held stocks, bonds, mutual funds. Okay? So again, people don't know what they don't know. People just invest in the market because they think that's their only option. But when they looked at the IRAs that were valued just above $5 million, how much alternative assets were in those large IRAs valued above $5 million? 25% of the assets were alternative assets in those plans. Does that blow your mind? The rich and the wealthy have understood that alternative assets, and private lending is one of the best alternative assets in my mind. Alternative assets outperform the market if you understand what you're doing. So that's where this powerful self-directed IRA comes into play, is that a company like ours, Directed IRA, allows you to have a retirement plan that can invest in real estate, that can private loan to other real estate investors. And here's the coolest thing, is you guys get to negotiate your terms as the lender. I'll pull up that private lending cycle here in a second because I want to point out some things on how the process works. And actually, can we pull up that private lending cycle? Let's pull up the private lending cycle real quick. We can go back. I'm going to actually do this because I really like what Grant did with that cycle. Sorry, hold for a second. Okay, just go to the beginning because I want to talk about how the process works with a loan. If you want to deploy money out in a private loan through a retirement account, how it's the same and how it's different. So, number one, Ashley, come up here real quick. Okay, there's 3 steps to self-direction. If you guys have not self-directed before, it's really easy. Okay? The first step is you call Ashley and you set up an account. Okay, how long does it take to set up an account?
Less than 5 minutes.
Less than 5 minutes. Can they do it on their phone?
Yeah.
Is it paperless? Do they have to print anything? Can they upload an ID through their phone? Okay, so it's completely paperless. You can have an IRA open in 5 minutes. Okay, and we already said you can have as many IRAs as you want. So if you have an IRA at Fidelity, that's fine. Set up the same IRA you have at Directed IRA or that you have over there. Once you get it set up, then we have to fund it, right? Typically, funding an IRA with us just involves a transfer. Okay, all we got to do is we got to send a transfer request to Fidelity. You dictate how much you want transferred over, and that money usually comes and arrives in the IRA with Ashley or with us in 3 to 5 business days. Okay? So once you have the account, the self-directed IRA open and established, this is where we're going to hit this cycle here. Okay? So now we've got an IRA set up. It's got funds in it. Okay? This is all the same. This is where the self and self-directed comes from. Okay? If you're a private lender, you're going to find the opportunity. You're going to find the borrower that fits your needs. Okay? You're going to negotiate the terms. You're going to negotiate the interest rate. You're going to negotiate the loan amount. You're going to negotiate the maturity date. How long, when's this loan supposed to be paid off? Whether there's an optional extension. All those terms are decided by you, the IRA's fiduciary. So you're making the terms of what your IRA is going to own, okay, once it makes this private loan. Okay, go to the next one. Okay. This is where it changes. So if I'm intending to, and what's your name? Brian. Nice to meet you, Brian. I'm Nate. Okay. So I hear you got a good deal, and I want to take money out of my self-directed IRAs, and I've got 2. I've got a self-directed Roth IRA and a self-directed health savings account. Those are 2 different accounts, 2 different tax benefits. And I hear you have a pretty good deal. Can you pay me above average interest if I loan money out of my retirement account? Yeah, the answer is yes. Yeah. Okay, so you can pay me above average interest. Okay? So I don't have to do any work. I don't have to deal with toilets or tenants. Okay? I just have to make a loan to you. Okay? But I'm not making it a loan as Nate Hare, the lender, right? I'm the taxpayer. I'm making the loan as Nate Hare's Roth IRA and Nate Hare's HSA. So there's always a name to those accounts, okay? Because these accounts are tax-exempt trusts. Okay? You're the fiduciary of the trust. We're the custodian of the trust. You're just quarterbacking the deal. So on the promissory note, okay, the attorney drafts, in my case, I'm going to have 2 lenders. Directed Trust Company, that's the custodian. Directed Trust Company, FBO, stands for the benefit of, Nate Hare Roth IRA. And Directed Trust Company, FBO, Nate Hare HSA. Okay? Does it have to be 50-50? No. Oftentimes, my Roth has more money than my HSA. So it'll say something to the effect of, let's assume it's a $100,000 loan. Okay? $75,000 is coming from my Roth. $25,000 is coming from my HSA. So it's a fractionalized note, owned 3/4 by my Roth, owned 1/4 by my HSA. It's one note. It's one lien. But you just got to make sure the attorney drafts it properly and has the correct vesting of your accounts. And you get that vesting once you set up an account. Okay? So now we've got the attorney agreement that shows the IRAs are the lenders. Go to the next one here. Okay? We're going to go to closing. Okay? If there's any documents that need to be signed, if it's a recorded document, we have to sign it because we're the custodian. Technically, your IRA is the one making the investment, so we have to sign on behalf of the IRA. We still need your authority to sign on behalf of the IRA, but we're going to sign really any documents, but I would say any documents that are recorded in public record has to have our signature as the custodian. Okay? All right. Projects, renovations, and draw inspections. Okay, there's a couple different ways you can handle this if your IRA is the lender. What most of our clients do is, let's say it's a $100,000 loan, but there's going to be $25,000 in rehab. Okay? We can just hold that back in the IRA. Okay? We can have instructions from the client, which would be me, to hold back $25,000, and when he needs draw money or when I need to reimburse him for repairs, I'll just tell my custodian to send $10,000, or I can do it in increments, or I can set it up in an escrow account. Okay? But again, I'm just quarterbacking the deal through my custodian to say when money needs to be deployed. Okay? Go to the next one. Here's where it gets sexy. Yes, IRAs can be sexy. Okay? When he makes payments, okay, he's going to make payments not to me, the taxpayer. He's going to make payments to my custodian, Directed Trust Company. Okay? We've got an address, okay? 3033 North Central Phoenix, Arizona, 85012. Okay? He's going to make a payment to Directed Trust Company, FBO Nate Hare. Okay? Directed Trust Company is going to get that check. They're going to split the check 75-25. 75% of the income goes to my Roth. 25% goes to my HSA. How much taxes do I owe? 0. Can I redeploy that money into another loan? Yes. Why do I like using 2 accounts? Those 2 accounts specifically. If you understand how a Roth works, by Roth IRA, I really don't want to take distributions to myself. That's when you get your benefit. I don't want to take money out until I'm 59 and a half. That's when my entire Roth IRA is tax-free for life. Okay, so I don't want to nickel and dime my Roth because I want that to keep growing so that it grows and it's tax-free by the time I hit a certain age. My health savings account does not work like that. My HSA, I don't have to wait at a certain age to take money out. I can take that 25% payment, I can take that right out of my HSA and use it today to pay for any qualified out-of-pocket health expense that my insurance doesn't cover. Things like acupuncture, prescriptions, holistic medicines, glasses. All the things you're walking into CVS and Walgreens for right now can actually be paid with tax-free interest income if you got an HSA set up. You just take the money out, it's tax-free provided you use it to pay for a medical expense. Okay? Let's say that I had 6 kids. Kind of aggressive there, but can I set up different ESA accounts before we do that loan and have my kids a part of this deal too, to where a portion of his interest payment comes where I can take their money out and pay for tuition and books and computers and your home internet bill. I mean, it's amazing how much you can do when money is not taxed. And that's the whole purpose of using retirement accounts. If you're going to be a lender, you can go all the way to the end there. Because, and I don't want to burst anyone's bubble. You don't get much tax benefit when you're a lender with personal money, right? It's a good investment. I'm not going to say it's not a good investment. But when you invest and you do private loans, you can go back to my slides if you want. When you do private loans out of a retirement plan, there's no taxes. The money grows and you can compound on itself. Okay, go to the end. Okay. So, how much time do I got, Brant? Good? Okay. So, here I'll talk about my personal, how I like to do loans too. Again, you guys can take it for what it's worth. But, and Brant kind of hit on this, is I like doing short-term loans. I don't know about you guys, but as a lender, I like doing short 6 to 18 month loans. Okay, why do I like doing that, especially if I'm talking about my retirement plan? Well, first, most of my borrowers only need it short-term. They're not looking for a 30-year fixed mortgage from my Roth IRA. They just need money because they found a hot deal, they want to close on it in 2 weeks, and they can get the money from my IRA custodian in 3 days. That's how fast this process works. Okay? But I like being in and out of a deal so I can fund their next deal. Okay? What that enables me to do when I'm making short-term loans and getting full payback through either a refinance or they sell the house, now I'm not only growing money tax-free, I'm compounding interest tax-free. Einstein said the 8th wonder of the world is compounding interest. If you could see the hockey stick growth of compounding interest when it's not taxed, I mean, that's really where the power in private lending and IRAs comes together, is the ability to grow massive amounts of wealth through the sweat equity of somebody else, and you're helping a local real estate investor pick up a deal and take an eyesore out of the neighborhood and make it nice again. Okay? But there are some rules that we have to follow, and it's really simple, okay? Because the IRS doesn't make it too easy on us. They make it easy when it comes to what investment that we put in our IRA, and we're talking specifically about a promissory note inside of an IRA. But the IRS does care who you make the loan to. Okay. Let's say we're talking about my IRA. We'll go back to my IRA. Since I'm the fiduciary to my IRA, my job to my IRA, which includes my Roth, my HSA, even my kids' ESAs, my job is to make contributions, make it grow, and then I get my benefit when I take the distributions. Okay? But the IRS does not want me telling my IRA to loan to me, because that's a conflict of interest, right? I make the decisions for my IRA. Do you think my IRA is going to tell me no? Do you think I'm going to tell me no? No, of course not. But that's a conflict of interest. So they don't want you to self-deal your IRA back to yourself and a specific list of family members. And this is really the only real rule you need to know when you self-direct, is that you cannot make a loan out of your retirement account to yourself, your spouse, your parents, your kids, their spouses. Okay? Now, there are some family I left off that list. I only named me, spouse, up the line, down the line, spouses. What other family members are there that are not disqualified to an IRA? Brothers, sisters, aunts, uncles, cousins, nieces, nephews. So in the IRA world, I could take my IRA, my Roth, and make a loan to my brother if my brother was a real estate investor. Okay? Personally, would I do that? No, because what if my brother doesn't pay me? That's awkward. Thanksgiving's right around the corner, right? So I personally don't like loaning to family, but just understand the rules that there are certain family members that you just cannot loan to. Okay? Can't loan money out of your IRA to yourself, your spouse, up the line down. Why do you guys think they pick on those family members and not the others? Why do you guys think? Maybe more influence on the others? Yes? Generally? When you die, who gets your money, your wife or your brother? If you give it to your brother, your wife will dig you out of the grave and kill you again. Okay? So it has to do with inheritance. And when you die, your IRA just doesn't go poof gone. It turns into an inherited IRA. And inherited IRAs, if you haven't left it to anyone specifically, usually goes to the spouse and then to the kids. So the reason they say no dealing with those people is because if you die, they have an inherited IRA with a loan to themselves, if they were allowed to do that. That's really the only rule. And we help prevent that. If we see that you guys set up an account, fund it, and then have a loan and we see the same last name as the borrower as your last name, and it's pretty uncommon, we'll stop that transaction and probably ask some questions. But just understand that simple rule, and you're good. Now, lend like a bank, I'll just say this. Brant covers this pretty well. You've got tools in your tool belt. You're going to use directed IRA to help facilitate anything that needs to go in and out of your self-directed retirement plan. But what we're not going to do is tell you how to structure your deals, right? You can't call me and say, hey, Nate, I've got this deal. I'm wondering, what do you think of these terms? I can't tell you if your deal is a good one or a bad one. Brant can, right? So when it says lend like a bank, yes, I do lend like a bank, right? I do things. I don't typically run a credit report. That's me. I like to just look at the property, and I like to understand who I'm loaning to. Typically, I'll loan to somebody that's got a little bit of a track record, so I know if I loan on the wrong deal, they'd have at least got 5 or 6 other deals that might be able to pay me. I do this. Again, this is just food for thought. I've seen when you can create your own terms on the note, be careful how lenient you are to the borrower. I've seen people do loans where there's a maturity date, right? It's 2 years out, but there's no requirement to make monthly payments. Okay? All the interest is payable at the maturity date of the loan, right? They say, oh, just pay me back in 2 years. The problem with that structure is what happens if your borrower disappears day one? How do you call that loan performing or non-performing if you haven't asked for any payments to be made? So if you want to think like a bank, do banks charge us monthly interest? Yeah, we got to make a payment every month. A lot of times the payment is not to just get money into the IRA. The payment is to gauge whether or not that borrower is performing on that loan or not, right? Whether you can say you've missed a payment, now I can start the foreclosure process. That make sense? Okay. Now, as far as interest rates, I mean, that's really up to you to decide between your borrower. Okay. Above average interest is pretty cool. When it comes to insurance and all those things, really the only thing that changes when your IRA is the lender is you just have to make sure your IRA is listed as the mortgagee, right? That your IRA is listed on the deed of trust. Okay. Nothing is in your name. Everything is going to be in the name of the IRA. We'll help walk you through that. Okay. And then use advanced strategies. Okay. Here's where I would say we differ from the industry. And I know a lot of you guys are familiar with my former company. Okay, we don't need to name them, but most self-directed IRA companies do not have a sister company law firm like we do. Okay, so we have a sister company law firm. Has anybody heard of Matt Sorensen and Mark J. Kohler? Anybody followed their stuff? They've got some pretty good stuff online. If you guys want to just learn more about like tax strategies and running a small business, they're great. Okay, they're the principals of Directed IRA. That's my company. And then we have also got a sister company law firm called KKOS Lawyers. Okay, 𝐏𝐫𝐢𝐯 lawyers. Okay, what does the law firm have to do with private lending? What the law firm will do for clients that want a little bit more flexibility and are a little bit more savvy, they don't want to deal with the paperwork and the timelines that we provide, even though we're pretty quick. What a lot of our clients do is they set up what's called an IRA-owned LLC. Okay, an IRA-owned LLC. So let's go back to me and his deal. Okay, instead of me loaning on a loan that my Roth IRA and my HSA are listed on the lenders as the lenders on the note, before I even identify a deal, I can have 𝐏𝐫𝐢𝐯 lawyers set up a multi-member LLC where the owners are my Roth and my HSA. Okay, you guys follow me so far? All we're doing is dumping our money into an entity first. Okay, before we do a loan, we're going to actually, the investment is going to be ownership of an LLC. Now that LLC can be a single member LLC, meaning one IRA is the owner, or that LLC, I had a client set one up last week where he had 14 IRAs as owners. Okay, he had a Roth, his wife had a traditional, she had a Roth. They had 3 kids they had on payroll, so they had Roth IRAs, they had HSAs. They had 14 different plans that they wanted to deploy on one note. Now, if you're going to continue that process, you got to fill out 15 forms. You got to do, everything's got to be done 15 times or 14 times every time you want to redeploy funds. So if you don't want to go through that hassle, we just need to fill forms out once. And we deploy the funds into an LLC, a multi-member LLC owned pro rata by all those plans. Question?
Can unrelated people make an IRA or an LLC with their IRAs?
Can unrelated people?
Like you're talking about husband and wife, let's say.
Yes, yes. Unrelated. Yep, unrelated people. Me and you can set up a multi-member LLC. We don't even have to have all IRA money in there. I can have 50 grand of Roth money and 50 grand of my own money and own this LLC 50-50. Okay? The solution that provides is it gets all your dollars in one business checking account, the business checking account for the LLC. And then guess who acts as the manager? You do. Okay? So it takes us out of the equation to have to reprocess all the notes or all the loans that you do, because on our books, we have the investment as the LLC. What's in the LLC, we don't even know. Okay? So I can have all my plans own the LLC, and then as manager of the LLC is now the lender on his note. Does that make sense? Okay, very, very important. You don't get paid to do this. Okay? You cannot have that LLC that's owned by your retirement accounts pay you. Okay? Because remember, your benefits from the distributions. You can't tell your IRA-owned LLC to make a payment to you for managing the LLC. But it does give you greater flexibility, okay, to find a deal and send a wire the next day without submitting any paperwork to us, and even bring in some outside funds or some personal funds too. Okay? So, did I bore you guys to death? Was this informational? Did anybody learn anything?
Yes.
Okay, all right, yes. And I know you.
Yeah.
Yeah. Austin. Yeah. Okay.
So this LLC that you create that's owned by the self-directed IRA, you open up an account to get money in. Can that be in a high-yield savings account?
It's a little tough because you're going to have to work with certain banks, okay, for this business checking account. Now, if you go through, because remember, we're talking about an LLC owned by IRAs. Sometimes you go to a conventional bank like Wells Fargo, their heads spin. They don't even know what you're doing. They're like, what? And I'll give you an honest thing. Here's what they do. As soon as you say retirement plan, they go, oh, here's our number to our wealth advisors. Just call them. And then they try to get you to move your money into the market. Okay? So we have a special relationship. Again, we don't promote them, but Titan Bank has been one of the best banks, the easiest banks to work with. I do not believe they offer high yield savings accounts for the IRAs, but it's free wires. You can actually opt in on the form to set up the LLC to just say, set me up a bank account, and you get a login like the next day. So, it's really hard. I haven't found a bank that will do that for that specific structure. But again, you're talking about just alleviating a lot of paperwork and getting all your dollars in one place. And then it's easier. Let's say that I want to partner with my IRA personally, okay, and I don't have the LLC. Okay, let's back out of the LLC equation for a second. I partner 50 grand and 50 from myself and 50 grand from my Roth IRA. We do that same loan. Because I'm partnered personally with personal dollars, he's got to send 2 checks every month. Okay. He can't send the whole interest check to Directed IRA and then Directed IRA cut me my half, or vice versa. He's got to cut 2 checks because some of it's to me personally. Once I get the LLC involved, he just sends 1 check to the LLC. Okay. So it alleviates a lot of paperwork. You get to track the payments. This makes it, there was a lot of other questions too. Yes.
They give you an extra layer of protection too.
Yeah. Gives you a little extra error protection, right? But it's really just the easy use and the ability to partner accounts together. Okay. Yeah.
But then when you use that money out of that account, like say for instance you have your LLC, sub-directed LLC money in there and your personal money, you have to make sure that you don't dip into, like, you have to have good accounting.
Yes.
To make sure you're not.
You really don't want to take any money out of the LLC to yourself, because when you do that, you change the ownership percentages of what's in the LLC. So again, this is just a way to have multiple buckets in one central location where the transactions go in and out of the LLC. And then when you decide, okay, I'm done with this, I want to start taking some money out, usually you got to send money back to us. So even though I say, yes, you can partner with personal funds, personally, I don't like it. I think it's messy. If you don't need the money right away, then sure, throw it in an IRA-owned LLC, or just keep those 2 buckets completely separate. As soon as you bring personal funds and IRA funds, you got to be very careful, and it just makes things sometimes harder for what you're really wanting to do. But it's possible. Should I take more questions, or should I?
That's the next section. So
Oh, okay. Okay, well, I know there's a lot of people that raised hands.
Yeah.
Who else had a? Yes.
I have an account with you guys before I knew you were there. And
Oh.
It took me about 5 minutes to set up. So.
Awesome. Cool. Yes.
So whenever you, obviously we're being our own bank and lending to whoever's in need. Like, so, if say like the person runs and you need to call, you can't call the loan, will it be the same process of foreclosing on them as well? You just treat yourself as the bank and do the same process?
Yeah, the foreclosure process is still the same. It's just if your IRA is the lender, you're going to have to get us involved to sign any documents. Right. But as far as like tracking down the borrower, making sure that they pay, that's really where the self-directed comes from. But as far as the foreclosure process, it's going to be no different. You're just going to have us involved with you. Good questions. Any other questions?
Any questions? No other questions? We covered a lot of stuff tonight. His stuff's a lot more difficult than mine.
And let me say this. Yeah, you guys do not have to be the experts on this, by the way. I'm just trying to read the crowd and give you guys the information that I think you guys need. But me and Ashley are accessible to you anytime you need us. All you do is go to our website, you schedule a call, you can find me or Ashley. If you just want to chat first before doing anything, I'm available, Ashley's available. And we've got some special discounts through brands.
Let's talk about that now.
Okay.
So you spoke of like with the self-directed IRAs, you guys are the custodian on it.
Yep.
If we make it into the LLC, you will still be the custodian on that self-directed part with our whatever.
Yep. Because the accounts are the same. Like we haven't changed the accounts that you have. We just changed the asset.
Okay.
The asset's not a note. The asset's an LLC. Okay. And then that LLC might own notes. So yes, we're still the custodian. We just got the LLC as the asset.
Okay. With the mixed fund.
Yep. You got it.
Well, I mentioned some giveaways earlier. We hit the next slide. We do have some giveaways. Oh, go back.
Uh-oh.
All right, we got an announcement. Sorry, John. I jumped. I thought that was the next slide. So we have an announcement. Yeah, close your eyes. I do have an announcement to make. So I mentioned that earlier. So about 8 years ago, wrote this book, and there was a previous company where Nate and I met, and there was another gentleman there with a similar first name. He helped me out with this book. He wrote a couple chapters and helped with the directed IRA information. And I was really grateful for it because that was his expertise. Well, that company is shut down and I needed some help for a relaunch of this book that's coming out this year. So I've been working on this a lot this year and I needed some help on the self-directed IRA help. So I gave Nate a call and I'm like, man, I need your help. So he's now soon to be, you can hit the thing. He's soon to be a co-author of the next private lender playbook. We're still doing a little tweaks on the cover, but that's coming out very, very soon. So you'll see Nate Hare as co-author, contributed multiple chapters to the book. So Thanks, man.
Thank you. Appreciate that. Appreciate you.
Yeah. So those of you know me, like, and like I know a lot of y'all here, like I only do business with people that I trust. Period. Plain and simple. I trust Nate. We go way back. There are other people that I could have called. A lot of other people. I'm like, I'm calling Nate. Yeah. And so thankfully did it. So I'm excited about it. So it's going to be launching very, very soon. It's the final revisions are with the editor right now, going through that. So be on the lookout for it. You know, do you have to all go out and buy the new book if you have the one? You don't. Hit me up. I'll give you the free version. I'm not trying to sell books or whatever. I'm pretty convinced. My publisher actually told me, he's like, there's only, because I was like, asked him like, hey, are we going to make any money when I start doing books? He's like, only 3 people make money from books. He's like, it's Oprah Winfrey, it's Stephen King, and Joel Osteen. I think those are the 3 mentioned. He's like, nobody else makes money from books. But anyways, check it out, and we're gonna have a couple giveaways from y'all. So let's go to the next slide.
Can I say something? I think everybody should have the book because it kind of goes over the stuff that I went. And I'm sure people borrow money in here too, right? Mm-hmm. You should have a stack of these books and give them to your lenders so that you don't have to teach them. Right? I mean, it's got the playbook, literally the playbook.
Well, literally why? So the reason that I wrote this book was, so I was obviously raising a lot of money, doing a lot of teaching. We were doing lunch and learns.
Yeah, we're doing
and the room was packed.
Yeah.
Right? When we were doing those things, like the room was
Tuesday morning.
just packed. Yeah. And so it sounds kind of silly, but I was answering the same questions over and over. There was such an appetite for it. And there's people like, maybe they were going to invest with me. A lot of them weren't, and that was fine, but I just didn't have time. And I enjoy, like, kind of weird, but like I enjoy writing and journaling and things like this. And so I'm like, I'm going to write a book. And so that's what I did to help people, because not everyone's going to invest with me, but it's not hard to do this the right way, but so many people, they don't have a playbook. They didn't know what to do. They do it the wrong way. Like yours truly in the beginning, like you did it the wrong way. So it's just like, let's just write a book. And so the book is done really well. Nate said it, like, if you're going to get into this, do it the right way. Spend a little ounce of, education is going to, pound a return on that. So, all right. So let's, go to the giveaway. Now it's time to giveaway time. So you can talk about this.
Okay. So this applies to anyone in here and anyone that you refer. Okay. I just ask, don't share this on your Facebook page for people that are not in this room to use. Okay. But this you can use anytime you open any account, whether it's a traditional, a Roth, a SEP, a 401k. These are all the ones we have, an HSA or an ESA. Just use private lender 150. Contact Ashley. Okay. She'll walk you through the process. She'll even walk you through the app over the phone and just send you it to sign if you want to make it easy. But if you use that, you get $150 off the first year on every single account that you set up. So I said this, but it doesn't expire then. We'll make it, Can you guys do it by then?
There's no 31st.
It doesn't exist.
That was a trick question. You guys caught it. Okay? But I would say take action, though, because here's the thing. The reason why I put June 31st, okay, is Jesus, is to get you guys to take action, because here's the thing that takes the longest in this whole process. Everything we talked about, you guys know what takes the absolute longest? For us to get the money from where it's at now. Not if it's Fidelity or Charles Schwab, but if you've got an account at Wells Fargo Advisors, I'm sorry, but they take 30 days to move money, and a lot of times they won't even send a wire, they send a check. It's like, why? So the reason why June 31st, is get your account set up and at least get it funded. Right? If your money's not moving in the market, get it to an account where it's at least not losing money, but it's at least in your self-directed IRA so it's ready to be deployed when you get a deal. Or if you like the idea of having the flexibility and the freedom to have the IRA LLC, that takes a couple weeks, takes about a week and a half to have it set up through the attorneys. So get all that stuff set up, because once you get the IRA LLC set up, if that's the route you go, and all the money is in there, you're ready to rock and roll. I mean, all you need to do at that point is just find a deal. And what are the wiring instructions? So take advantage of that. Use private lender 150. share it with your friends, contact Ashley. She'll walk you through the process.
So the delay from some of the different places, is that caused by liquidating things or doing a transfer?
It's all over. So
you just ask for the money and send it to me, they'd be faster.
no, you don't want that because that's a distribution. So,
Let's roll it over.
well, but you can only do it once every 12 calendar months. So once you do that once, you can't do it again. You want to save that for when there's an emergency. I got a medical emergency. I need to use this money. So you want to do IRA to IRA transfer once every 12 months, right? Per IRA. All your IRAs, though, they're all treated as one. They're all treated as one, right? So the longest movement is if you've got an old employer plan. So if you got an old 401k or an old 403b, a TRS, a TSP, if you just leave your company, they take longer because they'll only send checks. They very rarely send wires. You guys know how long checks take? You know how long mail takes these days? It's forever. It's like 2 weeks. We had a guy miss out on $1 million deal because he requested a check. Like, just pay for the wire. Like, he could have wired it actually. But when you're moving money, just get it to the place it needs to be and don't try to do it after you find the deal. You will lose the deal if you're trying to move money. And they will, and back to your question, they'll come up with the craziest reasons why they won't move it. Oh, you guys missed a box on here. No, we've got the PDF version. We clearly checked the box, right? That delays us 4 more days. You'll have the advisor try to talk the client out of moving. Are you sure you want to do this? These self-directed IRAs are risky. I'm giving you real life stories.
So they're just making money on float.
They make money on float. So the longer they hold your money, the more money they make. This is the business that they're in. So just rip that Band-Aid off, get the money moved, get it into an IRA LLC, and then you don't have to talk to anybody after that. Still got to play it safe, though. No loaning to yourself out of your LLC. We won't see it, but, you guys get the point.
Could you say that again? You said you can only do what every 12 months?
It's called an indirect rollover. So even with IRAs, I can take a distribution to myself, okay? Now, there's going to be a 1099 generated with that. So if I don't want to pay the taxes and penalties on that distribution, I got to put it back into the same IRA, not same taxed IRA within 60 days. Okay, so what he's saying is sometimes the custodian you're trying to move it from says, oh, our processing time is 2 weeks. And then you go, I got a deal that needs to fund tomorrow. Okay, give me the money, okay? And they'll do a distribution faster. Like, they can cut a check, but they won't send a wire. It's weird. So you could take the distribution and then give us the check, and we code it as what's called an indirect rollover. But you can only do that once every 12 calendar months. Once you do it, you can't do it again for another 12 months.
Can you just fund from your, checking or whatever?
You can. You can, but again, that now you're loaning as an individual. It might be a good deal, but there's no way to take that loan and dump it in your IRA after you've deployed funds personally. So if the end goal is to own it in your retirement account that's not taxed, you got to start it in the retirement account. It can't be funded by you personally out of your pocket. And
No,
then
I'm saying, can you fund the self-directed IRA account?
you can fund it with a contribution, but there's limits on how much you can contribute.
Okay.
So oftentimes we're not going to be able to get all the money we need by just making a contribution. Okay. The IRAs, the Roth and the traditional, you can only throw in $7,000 a year. Okay. Now, for those of you who are self-employed, if you've got the solo 401k, that one you might be able to put enough money in there because that contribution goes up to 70,000 plus. So, but easier if you just get it set up and money moved instead of trying to make a contribution to, yeah.
Did you give the distinction from the SEP IRA and the solo 401k?
Yeah. I mean, they're both plant.
$70,000, right?
They are, but the solo's just much better. There's only really 1 or 2 reasons to have a SEP over a solo. So they're both under the category employer plan, which basically means you've got some 1099 or Schedule C income. Okay. As long as you've got that income, you can make additional contributions to a SEP or a solo. The grand total max is the same, $70,000. But the SEP, it's only as an employer contribution, and it's a percentage of your income, your net income. So it's roughly 25% of your net income. So if I make $100,000, I can only put in 25 into a SEP. The solo, since it's a 401k, most people know how a 401k works. You've got the employee making contributions and the employer. Well, with my solo, I'm both. I'm employee and employer. So my employee contribution, that can go in $23,500 off the first $23,500 I make. So I can make a $23,000 contribution on $23,000 of income, not $100,000. Then I can come in with my employer contribution and still give the $25,000 contribution. So now I'm talking 48,500 in a solo off the same income as the SEP. The solo also has catch-up contributions. The SEP doesn't.
And the solo can be a Roth.
And the solo can be a Roth. Yep. So I like the solo a lot better than the SEP. The SEP is really for people that have like small businesses where they want their family members to have accounts too, and they don't want them in the solo, so they set up 4 or 5 SEPs, and they're like paying their sons, and they're making contributions for everybody. That's really the only reason the SEP is better than or is more useful than the solo.
You said you can treat the solo like a Roth, so
yeah, you can make Roth contribution to a solo, and
up
yeah,
to 25 as the employee.
yeah. I don't want to get too off in the weeds, but if you go to our website, we've got articles and videos on what's called a mega backdoor Roth. Long story short, you can get $70,000 of Roth money in a solo 401k in 1 year through just contributions. So if you want to massively get your Roth IRA started and you're self-employed, start making contributions, Roth contributions to a solo.
Cool.
Man, smart group.
Yeah.
And yeah, anything you can do to keep it from Uncle Sam, you know. And here's the thing, we talk about generational wealth. If you guys really want to pass on a legacy to your kids, pass them then some real estate or some income producing notes that are just kicking off income from borrowers that are not taxed to them. Mm-hmm. When you die, those just turn into inherited IRAs. They get to live tax-free off the income for at least another 10 years. And here's the thing, you give again, everybody in here has responsible kids, I know it. But if you give an irresponsible kid $1 million fidelity account, what do? Gone, sold, right? Everything. You give them $1 million worth of notes. Harder to sell. Maybe forces them to figure out what's going on here. Yeah. Like, you know what I mean? So they might squander the interest income, but it's real hard to sell those notes off. Who are they going to sell them to? Yeah. So preservation of wealth right there.
Yeah. Anything else? Nope. Yeah, go ahead.
Question on the cycle. Mm-hmm. Instead of lending, you're doing kind of owner finance, similar cycle. Where do you draft the documents? The title or a lawyer?
Same thing, okay. An attorney. Yeah, so if you're asking owner finance question, I don't want to get too far into that. But yeah, we still have title company closings with our owner finance transactions.
Yeah, I guess what I was wondering is, do you bring the drafted documents to title or title drafts?
Oh no, we don't draft anything. The attorney drafts it up. We give the attorney the outline of our agreement. Mm-hmm. Here's an interest rate. Here's the rate, the terms, the maturity date, all that type of stuff. We send that to the attorney in a document. It's in the course, and then so that attorney takes it and they draft the documents. Yeah, and that cycle, you're essentially the lender and they're the borrower.
Yeah.
Yeah. Okay. Got a couple other giveaways. Let's go. All right. So who wants to get a book? Who doesn't have a book? All right. So let's see here. I've got a couple of pop quiz questions. All right.
Oh.
All right. Let's see here. You're too smart of a crowd here. I'm going to go with the self-directed IRA questions. What's the biggest tax benefit of using a self-directed IRA? The biggest benefit. All right. Yeah, there we go. Y'all were a little slow on that. There you go. Do you have one already? Okay. All right, one more. I got one more. All right, let me see here. I got a bunch of questions here. Did we talk about this? Is that too advanced?
Let me see. No, we talked about it. Yeah, we talked about it in the, I didn't talk about the form though.
Yeah, that's
I talked about the process.
Okay.
Yeah.
All right. Okay, here's a good one. Okay. You can use your IRA to buy a rental property and live in it. No. Who said no first? No. Nope. Who said no first? You did? Okay. All right, there you go. Let's go next slide. Okay, so we're going to wrap up here. If anybody wants a digital copy, you can get a digital copy. All right, so anyway, if you don't have it, you can get it from here. You go to HoustonCapitalGroup.com. There is a couple places on there you can have it. If you go to the next one. If you go there's a questionnaire if you guys want to reach out. If you're interested in investing and lending, you can fill out the questionnaire and we can schedule a time to talk. If you just want to get more information about lending, You can go to the HoustonCapitalGroup.com. There's blogs, there's resources, there's things that you can download. There's training. There's a training series on there as well, so you can get more information on there. And there is a link on there as well to get a free copy of the book. Okay, so what's that?
No, that's you.
Right, the Houston Capital Group is my site, so you'll get some information from me on there. So there's a few. I suspect there's 2 or 3 real estate investors in the room that actually aren't looking to lend but are looking to borrow. Correct me if I'm wrong. So for you guys, I don't know if y'all saw this video with Wes Foster, who those of you who know, I don't want to share too much, but he's doing much better. Had a little heart issue yesterday. Well, Wes he's a go-getter. And I don't know if y'all saw the video or not, but he went through a training that I put on a few months ago called Private Money Mastery, which teaches real estate investors how to raise money the right way. And there's a lot of people doing it the wrong way. And this is basically everything that I've been doing for 18 years. So let's go to the next slide. So we've got a training out now that's called the Private Money Mastery Training. And there's a few things we're still in beta mode, but it's there, and we're making some improvements to it. So if anybody does anybody want access to this or no? Anybody want access to this? All right, so go to the next slide. So here's what you're gonna do. So the Private Money Mastery Program is, like I said, what I've been doing for close to 18 years now, kind of showing you all the steps, how to do it the right way, so that you can do it. Like you can say, hey, I've paid 100, 1,000, 10,000 mortgages without missing one, by doing it the right way, by helping and serving lenders. Okay. And that's what we do. So if you want to get access to this training, here's what I'm going to do. I didn't bring y'all here to sell anything. So don't worry about the price tag on it. But what I'm going to do, and those of y'all were at Ben's event yesterday, which Ben, I'm going to have you come up in just a minute. I apologize. I didn't bring you up earlier. What we're going to do is give you an opportunity to earn it for free. Does anybody want it for free? All right. So when negotiating, I've been told, I don't correct me if I'm wrong, Richard, if you give something, you're supposed to ask for something in return. Is that how it works? I don't know. I'm not a good negotiator. I've just been told that. So here's what I'm going to do. All right. Click it. So it's all right. So hit it one more time for me. So here's what you're going to do. Anybody who wants it for free, it's real easy. Go ahead there. So what I want you to do is post a picture online, Instagram or Facebook, and you type in, you're going to type Private Money Mastery, let's go. Is that easy? So one other catch, you got to put a picture on it. Okay, you got to put a picture on it. So go back to the Private Money Mastery thing. So anybody wants to do it? Y'all ready? So I'm not going to stand here forever. So you take a picture of me with it. Or you can just do that picture, that's fine. Or I want to take, on this side, get Nate in the picture. Okay. And you're like, what's Nate in here? All right, y'all ready? Take a picture. There you go. All right, so post it on Facebook or Instagram. Tag me in it. And then give me a little bit of time. Me and my assistant are going to send you a code so you can get access to it for free. Easy enough? Easy? All right, cool. All right, let's go back and I think, okay, there's my social media stuff, Instagram, Facebook, Houston Capital Group as well, if you guys want to get some more information. And guys, that's all we have.
Can I make one?
Yeah.
So Ashley said, if anybody wants to get a self-direct IRA open, she'll walk you through it out on her laptop. The first 2 to do it, we've got our own book, the Self-Direct IRA Handbook. She's got 2 copies out there. She'll give those 2 copies to the first 2. So.
Ben, last but not least, Ben, come up. So who here knows Ben Deal?
Oh, yeah.
All right. So Ben is one of the, I can't say you're up and coming anymore. He's one of like the big influencers of the local real estate investor agent market. So he's going to share a little bit about our team at eXp Realty and talk about that a little bit. A lot of y'all know we're at Ben's event yesterday. It was an amazing event, but I'm going to let Ben speak, and he's just a go-giver. And I didn't know I was going to need help tonight. And 3 of my clickers didn't work, and I was having this issue and this issue. And Ben came in and was like, no, I got it. I got your tripod, and it was a lifesaver tonight. So Ben, tell them about what we're doing at the XP.
So any agents in here? licensed agent. Anybody know a real estate agent that they work with? Okay. So our team and community, we're an investor agent community. We're partnered with 𝐸XP. We're actually inside of Wolfpack, which is one of the fastest growing, most dynamic communities in the entire real estate industry. Okay. So we've got over 3,500 agents that are global. And Brand, through meeting the founder of our community, 𝐏𝐫𝐢𝐯𝐚𝐭𝐞 𝐿 at a self-directed IRA event.
That's true. That's true.
5 years ago, up in Dallas.
7 or 8.
Is how Brand got connected. Yep. And Brand's team in our community with Connor is the second largest piece of that 3,500 agent team in our community. And so the unique thing that we're doing is we focus on real estate investing and leveraging social media. So we've got some of the best real estate investors like Brand, Chris, Connor, our entire team and ecosystem that are leading the investment space and then also leveraging social media, which is how Connor built out his real estate investment business up in Dallas. So if you're a real estate investor, if you're looking for, looking for more deals and you're not finding them, we've got an incredible team and community of agents, investor agents that are well versed in finding deals, working with investors, speaking the language that you're looking for to help you get more deals to grow your business or your portfolio. And if you're a real estate agent looking for a place to run with people that are doing what you want to do, have created the results that Brand's created in the business as well, to learn from and work with the best, that is the opportunity you have. So feel free to reach out to me. I'll be here. You can ask Brand as well. He'll get me in contact with you. So if you are an agent, or if you know an agent or your primary agent that's helping you source deals, get them plugged in and get them information about our team and community. So
yeah, absolutely. Thanks, Ben. Yeah, and Ben is constantly running his own events, having training events, just pouring into his agents. So those of you who are agents, I strongly encourage you to reach out to Ben. If you know an agent who's looking to build their business or is looking to invest, and that's really what our expertise is. Like, we're an investor agent group. Then definitely reach out to Ben. All right, guys, I really appreciate y'all coming out. Like, did y'all have a good time? You get a lot out of this? All right, great. So come on up, Nate, and can we get a shot? Can we get a picture together real quick?